what they're doing is building narratives to describe why the price action is, and it may not be the accurate narrative. So it's like suddenly they go from, oh my God, we're all going to be rich, to Trump's ruined everything, tariffs are going to destroy the world's going to go into recession, this is the worst thing ever. Maybe it's not that. Maybe it's as simple as the flow of liquidity into markets, and over time, crypto gets adoption. So that's why I try and just lighten it up, because I know we've talked about this before. All of our life savings are in this, right? It matters massively. And I get that. So I'm not flippant about that. What I'm trying to do is get people to relax and understand there are ways to do this.
Hey guys, welcome to Everyday Finance. The market is feeling bullish again after Bitcoin broke above the $100,000 mark for the third time in its history. But experienced analysts like Real Vision CEO Raoul Pal are warning against getting caught up in the excitement. Pal encourages investors to think about progressively locking in profits, even as price momentum picks up speed, despite the robust technical and macro backdrop. A combination of global factors, including resurgent institutional demand, increased geopolitical tensions, ongoing trade imbalances, and growing concerns over sovereign debt burdens in traditional economies, are driving this most recent rally, which follows weeks of sideways consolidation. As rising interest rates and fiscal instability put pressure on traditional markets, Bitcoin is once again becoming a favored alternative store of value and perceived safe haven. In the Bitcoin bull cycle, Pal characterizes the current market behavior as the start of Banana Zone Phase 2, a high-velocity stage where prices can rise sharply and investor participation broadens significantly. He points out that there may be another parabolic leg higher in the coming months because the same technical patterns and market psychology that characterized the previous explosive rallies in 2017 and 2021 are now resurfacing. But there is also more downside risk and increased volatility associated with this acceleration phase. Sharp corrections usually follow euphoric phases of Bitcoin rallies, especially after retail enthusiasm peaks or macro headwinds change. In order to reduce exposure to possible reversals without sacrificing long-term upside, Pal highlights the significance of disciplined portfolio management during this stage. The market is approaching a pivotal point as Bitcoin keeps breaking new ground, where risk and opportunity are both increasing simultaneously. Timing and temperament will be just as crucial for investors navigating this terrain as conviction. As Bitcoin continues to push into uncharted territory, keep an eye out for Raoul Pal's roadmap for the future, which includes insights on key indicators, risk management techniques, and what to anticipate.
Oh, it's interesting because you speak to a bunch of these people, like speak to Wences Caceres, he was like OG Silicon Valley. He bought $2 million of Bitcoin at $3. And he's like, I asked him how much he works now. And he said, an hour a day.
He's still doing the Bitcoin Vault Xapo thing.
Yeah. But he doesn't work on it. But the point being is like, it's very difficult to build any business, even a SaaS amazing takeoff product that does the same returns as just owning Bitcoin.
Yeah.
It's like the NASDAQ is down 99.97% since 2012 against Bitcoin. And tech stocks have been the next best performing asset in the world.
So what do we do?
Just try and get as much cash flow as possible and stick it into crypto. Coin things. I don't own any stable coins. I've never owned any. The off-ramp is so hard.
It's absolutely.
In the Cayman Islands, none of the banks will accept it. So all the crypto I've ever bought, I've never been able to sell because I can't take it out. Well, when people say, what do you do? I'm like, I'm sort of in finance, but I'm also in media and I'm also in crypto.
Do you say crypto?
Yeah.
Because nowadays I feel it's still kind of...
It's still a bit dirty.
Still.
But I like it that way. I like it dirty.
Will do.
And so, it's kind of like finance, media, crypto, and you kind of see where their interest lies. But if it's an Uber driver, it's usually crypto. They don't give a shit about that. I don't mind.
if they don't know you?
If they don't know me, they tend not to ask the questions because they're topics that scare people. Finance, media. Oh, does that mean you have a podcast or do you do whatever? And then crypto, if they don't like crypto or don't know about it, it's daunting. So they don't ask. Because I've tried to explain to people, this space is long term. The hardest thing to do is not lose your shit. Every newbie who comes in loses their shit. You tell them, hey, listen, because of the tightening of financial conditions last year, the market's going to start weak. They're like, yeah. When it happens, it's like, oh my God, what's happening? I'm like, I told you, the market should be weak because of the financial conditions. Another week later, what's going on? Nothing. The market's going to be tight. And then they start assigning narratives to it. And everyone starts to, and that's why I try and be flippant on the podcast to get people to understand that what they're doing is building narratives to describe why the price action is, and it may not be the accurate narrative. So it's like suddenly they go from, oh my God, we're all going to be rich, to Trump's ruined everything, tariffs are going to destroy the world's going to go into recession, this is the worst thing ever. Maybe it's not that. Maybe it's as simple as the flow of liquidity into markets, and over time, crypto gets adoption. So that's why I try and just lighten it up, because I know we've talked about this before. All of our life savings are in this, right? It matters massively. And I get that. So I'm not flippant about that. What I'm trying to do is get people to relax and understand there are ways to do this, the don't fuck this up thesis that we've talked about on this podcast before, just ways of not worrying about it. And so then it's been interesting to do that Drinks with Raoul show that's kind of become cult viewing now, because people love it because I insult everybody, which is funny, because if you think of the average audience age, they're generally in their 30s. They're generally learning about things like wine and stuff like that. And they like to be told that they're Philistines and that they need to get more classy.
Why do you think people like to be insulted?
I don't know, but they come up to me all the time, say that it's the best show that they know of because I just insult everybody. I don't know, but it's because it's genuine and it's fun and it shows a sense of affection for the people in the community, that you kind of know what they're going through and who they are, and it resonates with them. They're like, yeah, I need to kind of get classy now. I'm getting old enough to think about, being a bit classier, stuff like that. And it's just fun. And also just making fun of Americans is my favorite hobby in the world.
Why?
I love Americans. I love America. And because they always come from we're the freedom country, the strongest nation in the world. And so to take the piss out of them is very funny. And they don't quite know how to take it, but they kind of like it as well. So it's just a fun thing. And Brits and Americans have always had this relationship of taking the piss out of each other, like English and French have. There's this endless, through the ages fun.
When and how to take profits is a fundamental question that many cryptocurrency investors have during bull markets. Raoul Pal recently answered this question in an interview. Pal supports a practical strategy he refers to as lifestyle chips, even though he continues to believe in the revolutionary potential of digital assets like Bitcoin and Ethereum. This tactic entails reinvesting a portion of one's cryptocurrency profits on a regular basis into physical assets that improve one's quality of life and provide some financial stability away from the erratic digital realm. Pal used a personal example from a previous market cycle to demonstrate this point. He used some of his cryptocurrency profits to buy land and build a house on the beach in Little Cayman that he had designed himself. The project turned intangible digital wealth into something enduring and significant, acting as both a financial diversification strategy and a deeply personal investment. According to him, these lifestyle-driven conversions can lessen overall exposure to fluctuations in the cryptocurrency market while simultaneously bringing about emotional and financial fulfillment. Pal stated that 2025 might offer the ideal timing, depending on how market conditions develop, even though he has not yet implemented this strategy in the current cycle. For investors who are torn between the allure of long-term holding and the pragmatic benefits of realizing gains, his viewpoint provides a fair assessment. Pal's lifestyle chips philosophy reflects a growing trend among seasoned investors, anchoring digital wealth in real-world outcomes without completely abandoning the long-term thesis. This trend is evident as crypto markets mature and enter increasingly complex phases of adoption and price discovery.
Anyways, good. I've embarrassed you.
It's okay. It's okay.
But, trust me, this is not going to help your ability to get a girlfriend.
They feel more safe. And they don't see... Anyway.
Oh dear. We need a psychologist here. We need ChatGPT on your psychology mode.
I started to see a psychologist 3 weeks ago, but that's the story for another day. Every week. Anyways, you're 57, I'm 33. Tell me something about your life that I can take with me for the next half of my life.
It's the same thing. I keep telling people this. Your comfort zone and where the magic happens. The reason you change your entire life, and I remember talking to you about this in Singapore, is you completely went outside your comfort zone and you did something new from scratch. And it completely changed your life. But you are now in your comfort zone. So you will have to find something that's outside your comfort, like having a girlfriend. But it's so true.
Yeah.
Right? That, just keep doing that. Get out of your comfort zone. Let the magic happen. Or fail in something. That is where life is. And also just get off this bandwagon sometimes. Just get a backpack on or go and do something that's different. And then you come back refreshed. As you know, it's really hard to carry everyone's hopes and dreams. And again, we've talked about this a couple of times. It's fucking terrifying for me. And
that's why you drink.
That's why I drink, yeah. Well, of course. And then will I get it right? And it's a weird thing because people want to get out of the cycle and buy back in, and I don't really want to do that. And so, there's a mismatch of interest. So you have to kind of get that across, which is the lifestyle chips and all of that. Will I get it right? Will I end up with egg on my face? Will everybody hate me again? I don't know. It's pretty miserable doing that. But I know it's the right path to try and help people. If I'm right that we're going from 3 trillion to 100 trillion, we're only 3% there. And when you understand that, you realize how powerful it is to help people. And it's not going to accrue to just a few rich people. It can accrue to anybody. It can accrue to that Uber driver in his own way, in a way that he could not imagine. And so the more you can help people, yes, it's very exposing to me. It's terrifying. But if I get this right in any way, shape or form, I've done something good.
Raoul Pal provides a realistic viewpoint on negotiating the emotional upheaval of a cryptocurrency bull market in his most recent market commentary. Pal advises investors to practice restraint and strategic discipline as digital assets once again enter a phase of accelerating gains and increased speculation, beginning with a stark warning against leverage. He believes that without the additional risk of borrowing, which frequently exacerbates losses more than it increases returns, the inherent volatility of cryptocurrencies already offers plenty of upside potential. Pal also warns against the common psychological trap of FOMO, or the fear of missing out, which frequently leads to retail investors flooding into rallies at the wrong time. Rather, he supports calmness and patience, emphasizing that emotional fortitude rather than impulsive trading is frequently linked to long-term success in cryptocurrency. Pal prefers a focused and conviction-based strategy when building a portfolio. He concentrates on a limited number of core assets with solid fundamentals and demonstrated network effects, rather than distributing funds among dozens of speculative altcoins. The projects he believes have the technological infrastructure, community support, and scalability to withstand market cycles and spur future adoption are Bitcoin, Ethereum, and Solana, which are among his top holdings. Pal also emphasizes the vital significance of self-custody, a point that has gained more traction in the wake of recent centralized exchange and custodian failures. Investors can lower counterparty risk and maintain capital control by keeping digital assets in private wallets. This is a crucial practice in a financial ecosystem that is constantly changing. Pal highlights throughout his speech that investing in cryptocurrencies is as much about attitude as it is about timing the market. Those who can maintain composure and consistency, particularly in times of high volatility, are frequently in the best position to reap long-term rewards. His message is unmistakable. Discipline is the best advantage in a market notorious for its chaos.